Good morning, everyone. Thank you for joining this session today. I welcome you to the Vetiva breakfast meeting on behalf of Vetiva Capital in partnership with Frontier Africa Reports. Today we'll be starting with the equity markets as well as the fixed income markets. Then we'd move to coverage of Pan-African updates from our media partners at Frontier Africa Reports. Would like everyone to note that this meeting is being recorded and is also being streamed live on our Facebook page. That's our Vetiva online Facebook page. So if you'd prefer to view from there, Also, would like everyone to note that this session is supposed to last for only 30 minutes, and that would include Q&A. However, if we're unable to get to your question during the allotted time for this meeting, we encourage you to send us your questions at research@vetiva.com, and we'll get a response to you as soon as possible. So we're starting with the equity markets, as mentioned, and this will be analyzed by Sheung Oshomo. Good morning, Sheung.
Good morning, Chima. Good morning, everyone. We start off with a review of the major markets in West Africa. Yesterday, gain. Total petroleum market MTN Ghana continues to lead activity level in that market, with another 1.2 million shares traded, and largely supported by 151,000 shares traded in Cow Bank. Overall, year-to-date improved marginally to 18.56% positive in that market. For BRVM, the index sustained positive momentum that we saw in previous session as the index closed 84 bips higher. Though we saw a 70% decline in volume traded, turnover improved by 4%. It was a generally positive session as we saw 20 gainers and 8 losers, with the financial sector and consumer goods enjoying decent upward movement in the session. The gain further moderated the year-to-date loss to negative 2.03% as the market continues on a positive run. And like we mentioned, or like we continue to mention, that market, we've also seen some mixed sentiment there. Normally we get to see 2 days of gain, and maybe sometimes then we see profit taking again. So most likely we might see some profit taking today, but largely the market is still positive. Moving to Nigeria, the market, like the other two major ones reviewed earlier, closed in the green with a marginal 9 bips gain. Following consistent days of losses, Guinness saw some level of cherry picking as the counter closed 996 bips higher to lift the ASI to a positive close. FBN and UACN were other gainers in the session that saw mixed sentiment. We saw Guarantee, Trust Bank, Dangote Sugar, and Oando all closing lower in the session. Like I mentioned earlier, activity was mixed. Volume improved 33%, while the turnover declined 22% to close at 2.3 billion, falling from the 2.9 billion we saw in the previous session. Banking sector continued to dominate activity level as they accounted for about 44% of the turnover in that session yesterday. So for our outlook for today, as expected, we have seen a mixed market so far this week, and we believe this trend will continue till the end of the week, with market sentiment as determined by market breadth closing lower at 0.64 times. We expect investors to continue to adopt a neutral position of sitting out the market with fair trades consummated, bearing any unexpected shocks. I think that will be it for the equities market. Thank you very much.
Thank you very much, Sharon. So with the recent demutualization of the NSE, now NGX, and its restructuring, we know that shares of the NGX is now tradable, although on the NASD. Can you give us a feeler or from your view, market perspective, of how investors are receiving and perceiving the stock and what we should expect?
All right, thank you, Shima. Like you mentioned, following the demutualization of the exchange, we saw the group being listed on NASD to trade. So I think the trading started largely yesterday, and what we saw was listed at around. We saw the price move from 25 to 27 at the early trading session, but much later in the day, and it was quite well beaded up, right? But much later in the day, we saw um, offers coming into the market, and the share price eventually closed at around 25, 22.50. So it dropped slightly from 25 that we saw it earlier in the day. We believe we'll continue to see this initial price movement in the stock until investors are able to one see coverage in terms of financials, as well as be able to see maybe analysts covering the name. So once we're able to see some clarity around that, investors will be able to put some valuation on the stock and a target price. So that will sort of moderate the movement you're going to be seeing in the name, and investors can say, okay, this is where we think this stock is, and this is where we should be pricing it. But largely, we'll just continue to watch that space. Maybe sometime next week, we can give a more informed view around the price and how investors are generally taking the listing or the listed stock. Thank you.
Thank you very much. Next, we'll be hearing on the fixed income market from Omarige. Good morning, Omarige.
Good morning, Chima. Good morning, everybody. So quickly, I'll start with the money market. So yesterday, we saw a very significant improvement in system liquidity. System opening figure was around 105 billion positive, coming from the 13.5 billion positive recorded on Tuesday. Despite the improvement in system liquidity, money market rate maintained to trade between 12% to 13%. This was largely because of the increased funding pressure yesterday, as players made provisions for a possible Omo auction debit today. So we expect that the market will trade at higher levels, given that there will be NTB auction settlement. So yesterday, the DMO sold way more than what they had on offer. So they'll roll over the maturing TBs today, and then they'll take out the amount from the system. So players will have to make provision for that, and we believe that will drive rates higher because that will increase the funding pressure in the market. Also, there's a possible Omo auction today, so that will also drive rates higher. So we are expecting retail refund today, and we believe this might taper funding pressure. So moving on to the FS markets, the parallel market remains stable to trade around 482 naira to $1, while the air and in window traded at a high of 422.81 naira to $1, closing at 410.5 naira to $1. We saw a significant decline in and turnover yesterday, as it closed at $21.92 million yesterday from the $53.53 million recorded on Tuesday. We expect the Naira to continue to trade at these levels in the absence of any significant supply of FX to the system. Moving on to the T-bills market. So despite the NTB auction taking center stage in yesterday's trading session, the T-bills market saw considerable activity as players improved offers on the long end in anticipation that the PMA results will print higher for the one-year papers. We also saw demand for the special NTBs. These papers were offered at around 6.3% levels. The OMO papers also saw reduced interest as offers remain shy of bids. So at the NTB auction, the DMO sold about 221% of the offer amount. That's about 153.4 billion, as against the 69.6 billion that was offered. The total subscription on the 91-day paper was 15.87 billion, as against the 15.91 billion that was offered. The total amount allotted on that end was 12.46 billion. As expected, the stop rate maintained to close at 2%, while for the 182 days, the total subscription on that end was 13.94 billion, as against the 4.5 billion that was offered. The total amount that was sold on that end was 8.8 billion. As also expected, rate maintained to close at 3.5%. For the long end, that's the one-year paper, the total subscription on that end was 217.59 billion, as against the 49.1 billion that was offered. The total allotment on that end was 132.1 billion. So as expected, also the marginal rate closed at 9%. That's an 100 basis point increase from where it closed at the previous auction, which was 8%. So when we are giving our projection for where this rate we closed yesterday, we said that given the fact that the secondary market has been trading at around 8.3, 8.5 levels, we expect people to be at very high levels. And also from what has happened in previous auction, which also played out at yesterday auction, the DMO has continued to borrow more than what they intend to borrow. So this begins to give an idea of the fact that rates will continue to increase as we all envisage in the market. So now there's an 100 basis point increase. This is just like 101 basis point shy of where the OMO paper currently is. So I believe was all begin to ask ourselves now is how far can rates actually go? So we are very close to the double digit already. So our expectation is that the market will trade very actively today, and some players will try to quickly book profits on their auction winnings, while some will also try to offload their extremely bad positions. Some people are still carrying NTBs that they own at 1% levels, 2% levels as subsequent auctions before, previous auctions rather. So they are trying to offload those papers. They have been offering those papers at around 6 point something levels, which is already a huge loss to them. So they'll try to probably offer it at better levels. But the thing is, I don't think anybody will be willing to take those papers off them, given that rates are on an upward trajectory. So I'll conclude with the bonds desk, with the bonds market rather. The bonds market maintained its current theme of sell-side pressure. However, we did not see any corresponding buy-side interest in that space. And this is largely due to the extremely tight system liquidity and the expectation of higher stop rates at the NTB auction, which played out yesterday. So players sought to offload their positions across the benchmark curve, especially on the long end. We saw offers on the long end hit the high of 13.8% levels, while we saw buyers try to cherry pick those attractive offers. Our expectation for today is that the sell-side pressure will persist in the bonds market today as players try to offload their positions in light of the rate increase on the one-year paper at the NTB auction. That will be all for Physical. Thank you very much.
Thank you very much, Amaride. So you mentioned, when you were speaking on the NTB market, you mentioned a special auction yesterday, special NTB auction yesterday. My question is this the special bills that the CBN had said we're going to introduce around last year. Does it have anything to do with this? And if it's not, is there any news on that end? Also, another question is, you mentioned that we saw sell pressure in the bonds market yesterday. How much of that has to do? You also mentioned it was because of the rate, the auction that was held in the NCB market, but how much of that also has to do with the bond auction that is set to hold in April, about 150 billion naira? And given that the last auction that was held in March, it was oversubscribed by about 180 billion naira. What's your expectation for the auction this month?
Okay, Chima, thank you very much for that question. Okay, for starters, what I mentioned earlier was not special NTB auction. What more aired yesterday was the NTB auction. That's the fortnight NTB auction that happens every 2 weeks. So I said special Bs. Okay, like you said, there was news last year that the CBN is going to introduce special TVs into the market. They did that. So I think the first paper they issued has already matured. That had the maturity date of March 2nd, 2021. So there's another one in the market now, which has a maturity date of May 31st, 2021. So that's why I said it's currently trading at around 6.3 levels. So what had yesterday was the NTB auction. So to answer your second question, the sell-side pressure that we are seeing in the bonds market is largely due to the extremely tight system liquidity. So what most players are trying to do, they are trying to offload their positions to create liquidity to take care of their short-term obligations. Also, given that people expect, or players in the market generally expect rates to increase, they also try to offload these positions, because if you are holding bonds positions at very low levels, the loss you will accumulate at the end of the day, if rates turn against you, is way more than what you will accumulate if you were holding a TB position. So, like I said earlier, the sell-side pressure was largely due to the extremely tight system liquidity and also the expectation of rate increase at the NTB auction, and that actually played out with the long end increasing by about 100 basis points. Also, my expectation for the bond auction this month, given that the 2027 is currently trading at almost 130 basis points higher than where it closed at the last auction. It closed at 10.5% at the last auction, and it's currently trading at around 11.7, 11.8, 11.9. So I don't think rates will increase that much at the auction, but I expect a significant increase across the three tenors on offer at the bond auction this month. So give or take 50 to 100 basis point increase, which will not still be up to where the secondary market is trading currently. But I don't think the DMO will increase stop rate by 150 basis point or 200. They might do it, given that at the end of the day is the bids that people submit that they are going to take an average of. Well, I expect it to increase generally across board at the bond auction this month. I believe that answers all your questions.
Yes, thank you. My question was more around what you expect for subscription levels, how you expect investors to react to the coming bond auction.
Okay, I expect the subscription to be heavy. If you look at what happened at this TB auction, like for the 1 year, the subscription level the total subscription was around 217.58 billion. So from the circular that they released this month, so they plan to offer 50 to 60 billion across the three tenors on offer. So I think, like it has always been, the auction is going to be largely oversubscribed. So, but what I'm speaking to mostly is what rate is it going to close at? What rate are people going to be submitting at the auction, given that they can already get very attractive offers in the secondary market? So the subscription level is going to be significantly oversubscribed, and I see a significant spike in the marginal rates at the auction also.
Okay, thank you very much, Omarage. Next, we'll be hearing from our media partners at Frontier Africa Reports. Today, we'll be hearing from Temple Ashadru. Good morning, Temple.
Good morning, Chima. Good morning, everyone. Thank you for listening. We'll take off from the northern part of Africa, where Egypt has recorded its a 10% year-on-year exports, growth in exports rather, 10% year-on-year growth in exports to 2.2 million tons in the first quarter of this year. And we understand that citrus fruits comprised some of the largest that they exported for the period, 1.2 million tons. I think I can attest to that because one of the key factories here in UK has actually been importing citrus fruits, strawberries and raspberries in recent times from the production facility set up a few years ago in Egypt. And followed by that is potatoes. I understand they exported over 400,000 tons. And they've also started exporting more to Japan now, because again, Japan has recently lifted a 25-year ban on citrus fruits imports from Egypt. So all that put together contributed to the 10% year-on-year growth that they recorded this period for the first quarter of this year. The other key story for us in the part in Egypt is that Suez Canal Economic Zone is raising or has already signed an agreement of raising some $600 million and a 10-year loan from 6 banks in Egypt. Of course, one of those banks is Bank Misr, which also just gave out some loans to a particular inertia real estate company in Egypt. We understand that this funding for Suez Canal will be directed towards the completion of ongoing infrastructure projects across the zone, the Suez Canal zone. And of course, these are industrial facilities in that area. In the eastern part of Africa, key for us today will be the fact that the Kenyans had been expecting the fuel price hike today, yesterday specifically. So of course, the government yesterday now reversed that plan because, as you know, the whole crude oil price increase has been contributing more to all of these challenges of fuel price hiking across nations. So they will do a monthly review of the prices, and everyone was expecting a 4 shilling plus increase yesterday to 127 shilling per liter for petrol, but apparently the government has reversed that. There was also an expectation around the diesel price around 107 shilling, from around 107 shilling to 109 shilling or 110 shilling per liter for diesel, and that has now been cancelled. That was expected to be like the highest for them since December 2018, but that has been reversed by government. So other key stories or headlines in that region will be that Uganda Central Bank also recently held its MPC meeting. The rates was left at 7%, which is the same band it had been for a while now. In Ethiopia, coffee exports is rising. $107 million was what they recorded in 1 month. That's for the month of March. The Tanzanian Prime Minister says he is drawing up a new investment plan, something that will help this new administration to get a better focus. In the southern part of Africa, we've got Botswana Stock Exchange now also planning to increase liquidity and to reverse the listing trend in that stock exchange. One of the strategies they're leveraging will be to introduce global depository receipts, GDRs, and some short-term debt instruments. All that they do expect will be able to help them generate or attract more issuers and increase their market's liquidity. Final for us will be that in the western part of Africa, Ghana's inflation report for the month of March came out and it was 10.3% flat. It was unchanged basically, but they also recorded some decline in food index, and that's at 10.8%. These are our headlines for today at Frontier Africa Reports. Thank you for listening.
Thank you very much, Temple, for these updates. So now we can take questions. If you have any question and you're joining us from Zoom, you can raise your hand if you prefer to speak. You can also use the chat or Q&A boxes respectively. Also, if you're joining us from Facebook, you can send your questions using the comments section and we'll be able to answer them. I see that Mushakbe has a hand raised. Please go ahead with your question or comment, Mushakbe.
Good morning, Chima. Good morning, everyone. I'd just like to intimate us on the inflation reading for Nigeria, which was released this morning. Inflation for March came in at 18.2%. Major driver was food inflation, which printed at 22.9%. In the core sub-index, the major driver of core inflation were health and transport sectors. We'll be releasing a much detailed inflation report later in the day. Please watch out for it. Thank you.
Thank you for the inflation update, Mushakwe. Next, we'll be hearing from Boston. Please go ahead with your question or comments, Boston.
Yes, thank you, everyone. Just a quick one important item on the calendar for today to watch out for is the IMF will be releasing Africa's economic outlook report for today for sub-Saharan Africa. And we expect Nigeria, of course, as usual, to feature prominently on that report. That will be released by the African Department of the IMF at about 12 o'clock Nigerian time. Everyone should be on the lookout for that on the latest sub-Saharan focused economic outlook by the International Monetary Fund. Thank you.
Thank you very much, Boston. So if we have no other question for us today, I would like to thank everyone for joining this session today. We also encourage you to send us any questions you may have to research@vetiva.com and we'll send responses out to you. We thank everyone for joining us today. We encourage you to remain safe and to practice the COVID-19 safety guidelines and recommendations. We hope to see you at the same time, 8:30 tomorrow.